The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your competence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about Wednesday, day 3, the midpoint range of the week. The 2 types of trade opportunities that can present in a well-engineered template. Trend trades, including the low-hanging fruit, page 96 in the playbook, and reversal trades, 3-session setups on a day 3. Now, on a day 3, we're looking for either high of week reversal, low of week reversal, or a market that has broken out and is in a trend for the trend continuation trade, the low-hanging fruit. Now, rinse and repeat is the same opportunities each week. Wednesday is day 3. Monday, Tuesday, Wednesday. We talk about 3-day setups, but Wednesday is day 3 on the front side. It resets to day 1, heading into day 2 Thursday and day 3 Friday on the back side of the week. Reviewing again, Friday is the closing range of the week, day 3. Monday starts the new week. That is the opening range. Day 1 in a new week. Day 2 typically expands the range on the front side. Day 3, Wednesday, also resets at the midpoint range, heading into the back side of the week. Day 2 typically looking for either monkey hammer range reversals, or in trending markets, we can look for range expansion opportunities. And then, of course, Friday, day 3 again on the backside, looking at escalator front side, elevator backside. We're looking at gold 1-hour chart. The vertical dotted lines are the daily separators. We're looking at last week's high and low levels as the new week starts. A market that has broken down today in the London session. Post-election results, we've broken out in our London window. If we go just Monday, Tuesday, Wednesday, we have our high of the current week and we have our low of the current week on Tuesday. The market has broken the previous week's low of week level before pulling back and breaking down heading into our US window. We now have what's called the low-hanging fruit trade, page 96 in the playbook. Now, the low-hanging fruit on a Wednesday, we're looking at a range expansion opportunity. London has put a low of the day level in prior to this market breaking down. That offers us a potential range expansion high-low of our high of the week made on Tuesday and the new low of the week made on today's London session. We are targeting a range expansion in a trend trade, the low-hanging fruit continuation trade, already in process. We have a pin hammer closing at our US session open on a 1-hour time frame. This market is being driven by other time frame traders, higher time frame traders. That's our 1-bar max stop on the hourly chart, which is over a 100 pip candle on the hourly chart. But understand, we're on a higher time frame template targeting the range expansion as our US session is about to open. Now, if we back this chart up and we look at our previous high-low boundaries that were made the previous week, we had a larger rectangle where the breakout failed. We have our low of week level that projects across right to the top of our last hour prior to the US session, the 7 a.m. candle. The market is in breakout. Understanding this is not the initial breakout, we've broken out, pulled back for the low-hanging fruit trend continuation opportunity. The best part is on our smaller time frame, we're able to reduce our risk on the size of the 1-hour candle by targeting the entry as the hour ends. As the hour ends and the 8 a.m. US session begins, we have a peak formation made heading into our US window, a lower low, and another peak formation, which means we can reduce our maximum risk now in a momentum trade setup to 1 candle. This is a momentum-based parabolic trade setup. This market should collapse immediately, which is what it did, allowing traders to capitalize on putting a target in for the range expansion. Now, when this market starts to auction, we can now look at trapping profits as it pushes into the initial low made in that first hour. Range expansion on day 3, a trend trade, low-hanging fruit in the U.S. session. In a market that had already broken out, it's a news catalyst impact momentum trade. Presidential election results have come out. The market has broken out, pulled back to the low of week level before breaking down and auctioning into the blow-off in our U.S. window. Now, the NASDAQ broke down on Thursday, closed in breakout, consolidated sideways Monday, Tuesday, breaking out. And just in simple terms, classical charting principles, again, we have a lower rectangle targeting a geometrical range expansion. So day 2 gave us the short squeeze off of closing price and closed in breakout and continued right away in the Asian window, breaking through last week's high of week and headed towards all-time highs. This particular instrument was not on my list today as a potential trade candidate, as I was not interested in trying to trade this in line with the trend. I was more interested in the low-hanging fruit on the gold trade. However, again, this example of where I talk about markets coiling sideways, this is the type of opportunity I like to look for. Once this market has left the station, obviously we had a third hour 10 a.m. club opportunity to resume the trend, which several traders took place in today. But understanding not to counter trend a market that is now on a range expansion on day 3, a trend trade continuation. This is a smaller variation of the low-hanging fruit again in a market that's already in breakout and continuing a strong trend. Next, we're looking at West Texas oil. So we have a market that's broken higher. It took out last week's high on Monday, continued on higher on day 2, expanding the range, taking out the high of the week from 2 weeks ago. When we come to the screen today, the market has broken down early in Asia, continued in London, triggering the low of the week level. We had inventory scheduled at 10:30 a.m. And when we come to our U.S. session window, the market breaks lower before making a small little double bottom into our second hour, the 9 a.m. hour, and closing back inside of the low of week level after 9 a.m. Our universal entry criteria, page 29 in the playbook, is met for the parabolic explosive short squeeze reversal back through the high of the day. Now, we had inventories at 10:30. This market had already taken $1 or more prior to inventories. A low of the week, high of day reversal trade, 3-session setup, page 37 in the playbook. Now, with all of these last 3 examples, you'll notice I've done nothing but draw the highs and lows of the week, come to the screen and looked for the signal. We've broken out of a market. The market has already broken out in gold, pulled back and rolling over for the low-hanging fruit. We've got a market that's broken the low of week and coiling for our reversal. And the NASDAQ was a runaway market already up high off of my watch list. I'm looking for simple day 3, one of 2 types, trend trades or reversal trades. Now, looking at the currencies, so I want to reinforce I'm trading the U.S. session. We're looking at major pairs. What signal do I have when I come to my session? I've got markets in breakout, but we have strong momentum after the election results. Japanese yen, Swiss franc, Canadian dollar. And once we're inside and the market is chopping back and forth, again, it's off my watch list. It's already left the station. I need a market that's either in breakout. We had the British pound, the euro, the Aussie dollar, and the New Zealand dollar. Now, just while we're on these pairs, I want to highlight something to traders who were trading the Asian session. You'll notice that we have the previous week's high and low. The markets broke out, but they've closed back inside of the range. Tuesday, New Zealand dollar closed in breakout at the high of the week prior to the U.S. election results being released, but we have the volatility starting right away. They take out the high of the week for the parabolic reversal. That is the first close in breakout. Now you'll notice again, people are calling these moves at new cycles and days and everything else. It doesn't matter. Where does it close in breakout? All these other closes are back inside. This is the first day that closed in breakout, Tuesday. So that brings this pair up on a watch list for anybody trading in the Asian session. Aussie dollar, same as New Zealand. First day to close outside of that range was Tuesday. That is the first close outside of the range. Euro, same, closing in breakout at the high of the week prior to the Asian session. Pound closed in breakout from Monday's opening range. Not outside of the previous week, but it closed outside of Monday's high-low level. And you'll also notice that last Tuesday's closing price, the highest closing price of the week, we had a peak formation there. The market has gone up and closed at that extreme, offering traders the parabolic reversal trade in the Asian session. Canadian dollar closing outside of the range. Swiss franc closing at the lowest level from 2 weeks ago. That is the lowest closing price of the new month, and also an explosive move in Asia. And of course, the Japanese yen closing in breakout outside of last week's low of week range, the first close outside of the range, offering traders the explosive reversal opportunity. Now, one pair that did not close in breakout but broke out during the day and stayed in breakout was the Mexican peso. Now, this is a great template because the market has pushed up through the high made in the Asian window before breaking down and making our lower low. That is the signature in a market in breakout up high at the high of the week for the pump and potential dump template. This market coils sideways in the second hour, and as the third hour begins, just prior to our 10 a.m. window, the market is coiling inside of our universal EMA, page 29 in the playbook, coiling for the explosive parabolic reversal, day 3, high of the week, in a market that has broken out, pushed higher before breaking down, making our lower low, the pump, coil, and dump template on the Mexican peso. So two potential signals again are markets that have closed in breakout and in markets that have broken out. Now, we saw 4 specific examples today. Traders only needed to take one opportunity to significantly compound their account, but also have a zero stress, zero emotion, pretty much zero thinking trade setup. And once they're in those markets, zero management. Stepping back, being patient, sitting on your hands, and allowing these markets to set up. Rinse and repeat. Currency, indexes, commodities, and metals. Looking for the instrument that offers us the easiest money-making trade setup on the day, taking one, maybe two, locking in the money, and walking away. Not interested in science projects. I'm looking for simple, repeatable, easy money-making trading setups. Review these charts, traders, print them off. The same setups will show again and again and again on different instruments. Simple and repeatable. Keep it simple. Have a great day, and may the markets go with you.